Hello, it is Tuesday, the 5th of August, 2008, and the market closed with a real big gain here today. Buyers showed up immediately at the open and continued to purchase even after the Federal Reserve met without really much volatility after the Federal Reserve meeting, as we typically see. That's the volatility there. Just a slight pullback down to the daily VWAP, and then it took back off again. I thought it was setting up to break down, but I think the smartest thing I said yesterday was that what appears obvious a lot of times in the market sets up a large move in the other direction, and that's exactly what we saw here today. So the market had held above that trend line that we'd been observing in here, and that seems to be the higher low that is now back in place, and we can look at it with a little bit of confidence. Last week we looked at the cup and handle in here, and I said that perhaps when we started pulling back, perhaps we're going to see a higher low, and then we could call this formation an ascending triangle, and it's looking like that's we're right back to the top end of this range. We've got higher lows leading up to it. I hate to get bullish every time it comes up here or sound bullish, but it looks as though it has the potential to break past this level, because the more times resistance is tested, the more likely it is to fail. Of course, there's a caveat on every single thing you do in the market, which is to have a stop. Yesterday the market came down to a level where it found support, and now it rallied once again. And you look at it, it's just it's a big move right here. Is it likely to break out from an extended point? Not usually, but you still have to be open-minded to thinking that if it does, you don't want to get left behind. Certainly the short sellers have been having a very difficult time in this market, and we're back above a rising 5-day moving average in here, and close to this level where the market has the potential to break past what's been important resistance here over the last month and a half at that 129 level. We do have still a declining 50-day moving average right up ahead. It's possible the market blasts right through that level and goes up to the next potential level of supply, which I think ought to be somewhere in this range here, between these lows from here and then this low. So if we can get moving higher, it looks like maybe 131 to 132 is where it could go. And now, ideally, again, I'd still like to see another pullback, maybe to 126 3/4 or so, and then a breakout. But you never, the market never complies with our wishes, which is why we have to be flexible and open-minded. And again, in such a volatile market like we have now, you have to be like I said, flexible and be willing to change direction very quickly. And if you don't possess the skills to do that, then I still believe that it's probably just a market that's best off left alone for most people. Again, though, it's showing some encouraging signs here. And today oil was down once again. The USO continues to decline. Perhaps this market is heading down towards these lows, which may be coincident with the 200-day moving average by the time that 200-day moving average continues to advance. But the oil here, we see that looks like maybe 98 would be an area where it would reverse this short-term weakness. But oil continues to be a factor here, and I think that it's giving bullish participants a little bit more confidence in this market overall. The Russell 2000 was up $1. It still continues to consolidate basically between the 71 and 72 level. I'm sorry, not the 70, but what I meant to say was the 50-day and the 200-day moving average, as well as this prior level of resistance, support broken, acting as resistance over here. So if it can get above that 72.5, that's the number I think it really needs to clear to make this in a little bit better condition. This weekly time frame still looking questionable, so just got to be quick to move in here. On the 30-minute time frame for the Russell 2000, this looks like our higher low on the 30-minute time frame, and again, 72.5 seems to be the level where sellers come back in and defend this market. So that's the level to be, the key level to be aware of as far as resistance for the next week or so, probably. The financials, very impressive strength here. This group was up 4.6%. back above the Bear Stearns low for the second time, third time, maybe in a couple weeks on a closing basis, and now above the 50-day moving average. So perhaps it slingshots higher a little bit in here if this market can continue to hold its strength. Perhaps it's headed up towards about 24 and change or so, maybe about 23 and 3/4 to 24. Looking at the let's look at the hourly time frame. We can see that the key level of support I've been talking about is 19 and 3/4, and then it looked like we were trapped in this little range of 21 to 22. That was taken out today, and now the market needs to clear these highs right here to really confirm that the buyers are gonna make something of it this time. But if you're involved on the long side, here's where we took out some resistance today, and now your stops probably ought to go below this little shakeout low right here. We do have a rising 5-day moving average, so short term it looks like the financials are going to be able to continue to move higher here, and perhaps it again can head up towards some of these next potential levels. Most notably, I think, is this 24, because we had seen this prior support here, and then the intraday resistance there as this market resumed its sell-off. So the financials, you got to be impressed with the way they act, but just a little bit distrusting of them because of the declining 50-day moving average. And let's take a look now at the Qs. The NASDAQ 100 was up $1.50, bringing that market right back up to the top of its range. This market had been looking weak, but again, the buyers showed up right on the open, and if you were short, then you got to cover into that strike. That on the 1 minute time frame, you can see that a little bit of a shakeout here, and then it rallied back above that daily VWAP, pulled back to the VWAP here. Stayed strong right up to the Fed meeting, a little shakeout before and after it, but clearly the buyers were back in here today, and now it puts this 46 level back into contention as far as a potential level of breakout. Last week it looked like we were going to do it. The market failed. Now we're right back up there, so it's trapping longs and shorts, meaning again that while we're in this range, it just pays to be a trader and stay more focused, I think, on the individual stock ideas, because there's a lot of good ones setting up. The shippers have been weak, a lot of the biotechs have been strong, and playing it one stock at a time until this market really breaks out of this funk and can really provide some better clues as far as an aligned market as far as trends go on multiple time frames. But great percentage gains in here today, and the market seems to be resisting going lower for now. So that's a good sign for now. The other thing about the S&P 500 I wanted to point out is that it's actually, we had a couple strong volume days here as the market was higher. Volume diminished on this pullback here, and we saw a couple days of bigger volume, followed by 3 days of pullback on diminishing volume, and then the volume relative to that decline is starting to increase once again. So that's a bullish volume pattern. Now we just need price to push us past these levels. But again, when you look at what the IWM did, IWM a few weeks. Where was it? Maybe here, getting back above that 50-day moving average. It was, short-lived pullback, but still setting up for potential further upside in this market.